Hi, I have seen people invested in mutual funds. They have an app. They open the app every day and see the value of their portfolio going up and down. But have you ever clearly understood what is happening behind the scenes? Is it a luck or is it a timing or is there a proper system working? Hi, I'm Swapnil. Let's understand this in a very simple manner today through this video. So, let us first understand what happens after you invest. The moment you invest, your money doesn't sit idle, it gets pooled together with money from thousands of other investors. This pool is managed by a professional fund manager. They invest into various asset classes, and hence, depending on which asset class they invest, that particular category of mutual fund is allotted to you. Suppose, say for instance, they invest in the strong companies or equities, that mutual funds are called as a equity mutual funds. Second, if they invest the money of the investors into bonds or income instruments, those mutual funds are called as a debt funds. And third, if they invest in the both, those are called as a hybrid funds. So your returns are not random. They depend on which kind of asset class they are invested in, either a equity or a debt or a mix. Now, let us first understand what exactly is NAV. The long form of NAV is nothing but net asset value. Most people don't know what NAV is. NAV is simply the price of one unit of a mutual fund. If the total value of all the investment inside the fund increases, the NAV goes up. If the value falls, NAV goes down. For example, you invested when the NAV was rupees 10 and today its value or the NAV is 12, then that reflects that the underlying investment has grown up by 2 rupees. NAV is just a mirror showing the fund's current value. Many people don't understand where do the returns of mutual funds actually come from. Mutual fund generates the returns mainly in two ways. The first one, capital appreciation. When the shares or the bonds bought by the funds increases its value, there will be a capital appreciation in the mutual funds. Second, income. Companies may give dividends and bonds may pay interest. So that income adds to the fund value. So when these increase happens, the NAV of the fund also increases. And when the NAV of the fund increases, your investment value also increases. So there is a direct relationship between a income or the NAV increase and your investment value increase. Now, let us first understand the real power of the investment, and that is time. Here's where most investors make mistakes. They expect of the very fast results, but wealth in mutual funds is created through time. When your returns start earning further returns, that's compounding. If you invest 1 lakh rupees at 10% annual return, here's what happens. Year 1, you invest 1 lakh rupees, that gets converted out to 1 lakh 10,000 after 1 year. From second year, your 1 lakh 10,000 will now be compounded, or you will get a return on this 1 lakh 10,000 of 10%, and your value after 2 years will be 1 lakh 21,000. And this process goes on. By the end of the year 10, your total growth will be 2 lakh 59,000. So, have you noticed something very important over here? And that is the growth keeps accelerating because every year you are earning returns on the increased amount and not just the original 1 lakh rupees. So, over years, this creates a powerful growth. Now, let us first understand the common myth. Many people think that low NAV means cheap fund and high NAV means expensive fund. This is definitely incorrect. NAV does not decide the future returns. Fund quality, asset allocation, and how long you stay invested matters far more than NAV, whether it is cheap or whether it is high. Now, a key takeaway from this particular video: mutual funds are not magic, they invest in real assets. When those assets grow, NAV rises, and when NAV rises, your wealth grows. Now, in order to have a real growth, you should have a systematic investment and a long term discipline. From this video, you might have clearly understood how exactly mutual funds make money. In the next video, I'll show you how you can choose the right mutual fund based on your financial goals so you don't invest blindly. If this brought clarity, like this video, share it with someone who needs this explanation, and subscribe for practical financial guidance. Thank you. Thank you very much. See you in the next video.